Traders, I hope you are good. Let's dive in. So we're going to discuss two trades, what happened, why one won, and why the other lost. And then we're going to get into what's possible next. So let's dive in. Now, first of all, we're currently zoomed in. Let's just zoom out to get the big picture. All right. This is our strong low. This is our weak high, and this is our break of structure. We are still bullish externally, but currently internally we are bearish. This is our high value area in terms of location to push the market back to the upside, and this is our high value area in terms of location to push the market back to the downside. As you can see here, we had this M15 contraction, which led to this massive move to the upside, and the market reacted out of there beautifully on the 3rd of June. And that reaction led to a creation of a nice area of demand. We can see here that we also got a really nice liquidity sweep on the low in this previous area of demand, pushed up into this nice area of supply. This would have been an excellent trade, but I missed it around 7:15 to push all the way down back to these lows. But I did manage to get this 140 pip move to the upside. So let's discuss why this was a great trade. But then looking at this afterwards, I should have been a bit wiser about this, and I shouldn't really have taken this loss, and I'll explain why. So this trade was really, really good. We can see that this move, this liquidity sweep, and this move led to a character change to the upside to this area of supply. So I dove into this just to see if we could get some really good confirmation. If we go down to the M2, we can see a few things happen here. Okay, so number one, we get a liquidity sweep of these lows and then immediately break this high. We get a small reaction here that represents a significant character trait when it comes to the breaking of an event break area. We got this little touch, and then it decided to break and close above, which is absolutely important. And then let me just get this right. I then took this, so I'm looking at this now as a sell to buy. So I took this candle low here as my area, and I think that was around, let's take a look, that's 25 pips. The market then decided to, it went sideways for a little while in here, but then it broke out and ended up hitting target. And I took these highs here because I thought potentially that, this was going to be a area of liquidity, and we've got this supply zone just above here to basically take the market back to the downside. But we'll discuss why that didn't work in a sec. So just going back to this again. All right. So let's just pay attention to a few things that's happened here. Number one, we have come off a contraction demand zone that actually broke structure to the upside when we look at the big picture. Okay, we got a liquidity sweep. Again, just further confirmation here that this zone has some potential. And we got our M2 confirmation, okay, with a break of the engulfing structure on the opposite side. We also got a liquidity sweep here, and we got that nice sell to buy structure close above, and we also got a really nice zone, nice touch, and moved out of there for a nice profit. Okay, cool. So that was trade one, and the reason why I took profit here is just in case, because sometimes gold has this ability to just touch the high and then turn back drastically, and never go through it until about, half an hour to an hour later. And I just haven't got the patience for that. But this time it just actually went through, which was really, really good. So this trade, now what I wasn't paying attention to for this trade, even though we got a break of this low, we got a break of this high, and then a break of this low, which led me to believe that this was a liquidity sweep. So this area was of high value, right, to then push the market back to the downside. But what I did not pay attention to is where it was located. Okay, so if we look at the structure, we're currently bearish. This is our A to B structure in terms of where our last bearish break was. All right, so if we get this location tool, let me put this down here. Where are we? We are in the middle where all types of fuckery happens. This is where you don't want to be taking trades. You want to be taking trades at the location edges, okay? At the extremes. That's where you get the best outcome and the best risk reward for your money. So I didn't have this location tool at the time, or I did, but I had it at the side and I wasn't really paying attention to it. Again, because I was too zoomed in. And if we zoom out slightly, we can clearly see that, you know, this is the middle, and we don't want to be fucking about in there, because that's where, as I said, all the fuckery happens, right? So that's why this trade did not work out. So that is the significance of this location tool. It is a really, really good tool. Learned how to use this from those boys down at RAMC. Definitely watch their videos. They've got some really, really great stuff. And it helps me out massively in terms of just making sure that I'm taking the trades in the best location. But on this occasion, I fucked up. Fair enough, no problem. So what's possible next? Now that we know that we're in location, and we know that we're in location because after the break of this low, there was no break of this high and there was no break of this low. So we are currently basically ranging. Okay, so we're in location. So the best place to take trades is at these location extremes. So what am I looking at now? Potentially. So we've got a pullback after this break. We've got a change of character now to tell us that there is a potential move to the upside. There is a nice looking buy to sell zone up here. We just get that marked out, get that mapped. And then we have two zones down here that I'm potentially looking at if the market moves down. And we have an area of liquidity here as well. So we've got this. First of all, let's just put on the structure. M15 range. Just open it up a bit, make it easier. Okay. And then we can draw our lines around this engulfing structure, just so we are aware. Boom. And then not only that, we have a really nice bullish engulfing structure down here. All right. Now, when we look at this, where is this structure formed? Now, when we look at this, where is this structure formed? At the location edges. So this is a prime spot. If the market decides to move down to here, this is a prime area to take a trade back up to this high value location area up here to this buy to sell location, right? So this is what I'm going to be looking for next. And you could potentially see the outcome of this trade in the next video, which will be awesome. And I'll see you then.